Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Right, that's as far as the US markets are concerned, but the bigger pain was in the European markets on account of the uncertainty that there is taking place in the Turkish lira and that region itself. The investors also reacted to corporate earnings and the fresh turmoil in Turkey and the ongoing trade war between US and China. So the German index, the biggest underperformer, sitting with a cut of almost 2%, followed by the French index, which was lower by about 1.5%, while the FTSE too ended lower by 1%. The bigger cut was seen in the euro, which dropped sharply against the dollar, following reports that the European Central Bank is concerned over the impact of a weak Turkish lira on European lenders. On the back of that, we saw a sharp range of cuts across the peripheral indices as well. But the biggest cuts were reserved for the emerging markets. Both of them should come up for you. In fact, the Russian as well as the Brazilian index sitting with cuts of almost 3 to about 4%. The Russian index out there ended lower by about 4% on Friday's trading session. So by that measure, the SGX Nifty is actually outperforming with a cut of just about 0.5%. So let's talk about the Turkish lira itself. Continues to fall through rebounds from record lows after Finance Minister said that the government has drafted an economic action plan to ease investor concerns. Our colleague Sri Jegaraja reports.
The Turkish lira regaining some ground out here in Asian trade after weakening past 7.24 to the dollar earlier. That's after its finance minister said the country will start implementing an action plan to ease investor concerns beginning on Monday. A bit short on detail, all we know so far is that bank foreign swap transactions will be limited. And it comes as Turkish President Tayyip Erdogan continued to stand firm against using higher interest rates to defend the lira, and he called on Turks to sell dollars and buy lira to shore up the currency. He also says there's a political plot against Turkey and no fundamental basis for the lira's plunge.
Is there any downtrend in our exports, tourism, trade, exports? No. Then what is the cause of such a storm? No cause. Do you know what this would be called? Exercising an operation on Turkey.
We have idiosyncratic problems that are unique to Turkey and its very unique role in Black Sea security issues, because it's so easily influenced by both the United States and Russia, because if you remember, Istanbul literally is the gateway to the east with the Bosphorus Channel. There are pipelines that go through the Black Sea into Turkey from Russia. So Turkey is very important geopolitically. So idiosyncratically it has importance, and we should be concerned about Turkey just from that standpoint. However, we care a lot more about it in the context of a more systemic problem, which is that developed market short rates have risen quite a bit over the past year. So would we really care about Turkey as much? Would the lira be depreciating as rapidly in the absence of higher developed market short rates? Probably not.
Okay, so remember that there is an over 40% depreciation which has taken place in the Turkish lira all the way since the start of the year. But let's stay with the currency space. The dollar index has edged lower against safe haven yen or the Japanese yen on worries about the exposure of European banks to the crisis-hit Turkey.
In the world of commodities, oil prices gained, recovering from losses in previous session on the back of concerns on oversupply.
All right, time for a quick break now, but up next, all the cues and news you need to work with for trade this morning. Welcome back. You're still tuned into Power Breakfast on CNBC TV18. Well, back home on the Lal Street on Friday, the market snapped a 5-day gaining streak in the session. So the Nifty ended 41 points lower, but managed to hold on to 11,400. The Sensex also fell 155 points to end almost 0.5% lower. The Nifty Bank fell 196 points, with SBI contributing 106 points to the downside move, obviously reacting to its numbers. Mid-cap index also ended 0.5% lower. So a lot took place on Friday, but Manglam, what can we expect today?
That's right, Ekta. You know, a lot took place on Friday, and then a lot took place over the weekend as well. The sentiment was soured in the second half on Friday after SBI reported its numbers. So the Nifty, which ended its 5-day gaining streak, and SBI was the one which led the losses to the maximum. In fact, you spoke about the Nifty Bank losing about 200 points. Most of them contributed by SBI. In fact, 50% of Nifty Bank's losses on Friday were primarily on account of SBI. Now, why is SBI so important? Primarily because, remember, 25% of Nifty's FY19 growth estimates were accounted to be purely on account of SBI. And SBI's first quarter missing numbers or missing estimates would mean souring sentiment for the Nifty FY19 EPS. So all the brokerages, the likes of Deutsche Bank, Macquarie, even Nomura, have cut their FY19 SBI EPS targets by 14 to 85%. And if Nifty's 25% growth is primarily on account of SBI, then that means a cut of about 2 to 3% on Nifty's FY19 EPS. So that is something the street will be watching out for. Individual stocks, heavyweights will be in focus. The other one apart from SBI will be HDFC Bank, as Deputy MD Paresh Sukhthankar has resigned. He told the senior management and the board that he wanted a change. Over the last 1 month, we've seen an outperformance that came by from ICICI Bank and Axis, and an underperformance that came in from HDFC Bank. So it'll be very interesting to see how this pans out going forward and what Paresh Sukhthankar's next move will be. From the mid-cap space, though, we'll watch out for a couple of stocks. PVR. On Friday's trading session, we saw an up move on PVR. They made an acquisition, albeit a little higher than what PVR's currently trading at, but it'll be very interesting to see how that stock moves. Sun TV, their ad revenue was higher by 17%. IPL EBIT was above estimates, so we will keep an eye out on that stock, given it has underperformed as well. FII sold in Friday's trading session. In index options, there was a sell figure that came in, and 11,500 is the mark we will be watching out for. Weak global cues, we open in the red. Let's see where we go from there, Ekta.
And stocks? A
lot of stocks to work with, Ekta. Last couple of days of the earnings season, so we will be watching only for numbers. Tata Steel reporting its numbers today. Let's see how that pans out. Coal India results missed the estimates. The company perhaps is going for volumes over realization, so that is something the street will keep on its radar. Dalmia Bharat as well. The margins came off by about 500 basis points. That was on expected lines, so let's see how the stock reacts in today's session. India Cements, the big positive in an otherwise weak set was the fact that the finance costs, they came in lower by about 16%, and the management said this was on account of repayments. But mind you, the finance cost was higher quarter on quarter by about 2%, so that is something we will be listening to in the con call as well. Union Bank of India, the slippage remained elevated. Andhra Bank reported net loss for the 4th consecutive quarter. Corporation Bank, 5th consecutive quarter of PBT loss, so nothing going well for the banking space. IOC, the revenues were higher by about 10%. Net profit moved higher by about 31%, as the gross refining margins came in at $10.2 per barrel. PC Jeweller, the revenue was higher, the EBITDA was lower, and the net profit came in at a growth of about 4%. But the street will really want to know more about PC Jewellers in the detail. NBCC, revenue at 19%, margins fell by about 100 basis points. Thyrocare, the growth disappointed despite margins being maintained. Glenmark Pharma, revenue lower by about 8.5%, and the EBITDA, that one came sharply lower by about 40%. Amara Raja too, similar was the fate. While the revenue grew by about 19%, the margins came off because the EBITDA grew just by 14%. The big outperformance from the mid-caps came in from Godfrey Phillips. Their EBITDA came in at 97 crores, which compares with just about 5 crores.
Okay. All right, Mangalam. Thanks very much for that. Well, let's listen in to some market opinion from independent market expert Saurabh Mukherjee, who says financials are a huge pocket of overvaluation in the market. From the banking space, he believes that ICICI Bank and Axis are much more interesting ideas.
I think smaller companies will have a tough time in this climate because your input costs are rising and cost of money, by and large, is going up. This week, I reduced my positions in large caps substantially, partly because of what I saw in that remarkable IPO. I think the defining event of the week was, I think, that remarkable IPO. And it just felt like a Reliance Power IPO type moment, where you see one of the largest AMCs in the country IPOing at a fairly punchy valuation and then going up 60%. So when you sort of see events like that, that suggests that we are reasonably close to the market topping out, because you're seeing a concentration of interest in a specific sector, the financial services sector. You're seeing extraordinary valuations, extraordinary amounts of interest. The 10 years that I've lived in this country, I've sort of struggled to see how one how one builds faith in these banks. The management teams are transient. The asset quality is ephemeral. So, unless I'm a sort of, godlike person who can time an entry exit into these banks, it's very, very difficult, with a straight face to sit on your channel and make a case for investing in PSU banks. Being a conservative soul, I would wait for the boardroom situation to stabilize in these two banks, and I think then there'll be actually very interesting buys. If the economic cycle, if the capex cycle also turns around the election and the boardroom situation in these two banks stabilizes around the election, I think they'll make very interesting bets at that juncture. I think CVs as an opportunity, I think it should be looked at, and to the extent you got two large CV companies in our country listed. You mentioned Tata Motors, and we're discussing Ashok Leyland. I think that's a very interesting space to look at. And pharma, I think if the rupee doesn't devalue itself for 5 years, which is broadly the case, right? The entire length of this rally, the rupee has been at this 66, 67, 68. Obviously, that's a challenge for pharma companies. But as we are seeing from a bulging current account deficit, I think a devaluation of the rupee is long overdue. And whilst I think the RBI is doing its best to keep the rupee at 70 or below, I think they're sort of dealing with sort of rising level of water. I think the rupee will breach 70 at some stage in the next 12 months, and pharma should be a big beneficiary.
Okay, so that's the opinion coming in. Take a break now. But up next, HDFC Bank's Deputy Managing Director Paresh Suthankar resigns. Welcome back. You're still tuned into Power Breakfast on CNBC TV18. Well, moving on to the big story then, Paresh Suthankar has resigned as the Deputy Managing Director of HDFC Bank. The bank's exchange filing says the resignation will come into effect 3 months from now. Ritu Singh filed this report with all the details.
Paresh Suthankar has been at HDFC Bank since its inception in 1994. He spent over 2 decades of his life serving at HDFC Bank. In 2007, he was elevated to Executive Director, and in 2014, he was made the Deputy Managing Director at HDFC Bank, second only to the CEO. And it was the wide expectation that when Aditya Puri retires, it'll be Paresh Suthankar that will take over the mantle from him and steer HDFC Bank from there on. So today's announcement of his resignation has clearly come as a big surprise to many, and we spoke to insiders within HDFC Bank. What we're given to understand is Suthankar told the board that the resignation was for personal reasons, although he did not specify if he would be joining any other financial institution or bank for that matter. We're also given to understand that he said to the board today that he wanted a change, in his current work environment. And although the management persuaded him to stay, Suthankar chose to resign nonetheless. His resignation will come into effect 3 months from now, another 90 days to go. So, which has led a lot of people to speculate on whether or not he could be joining Axis Bank, where Shikha Sharma is due to retire in December. But of course, insiders within HDFC Bank that we spoke to said it is unlikely that he would join a rival like Axis Bank, but we'll only find out at the end of those 3 months where Mr. Suthankar finally ends after his long journey at HDFC Bank.
Okay, all right, Ritu. Thanks very much for that. But let's listen into some expert opinion on what they make of this move and the outlook for HDFC Bank going forward as well.
Clearly says the circular, it is 90 days notice effectively. If you count August 7 today, that is, you're talking about 9th or whatever it is, you're talking about August, September, October, right? So 3 months notice and Shikha goes off in December. So it exactly ties in with his resignation, and perhaps the new guy is likely to join Axis Bank. So that's my guess at this point in time.
People will look forward that who would be the next in charge and who would take the reins. I think HDFC has become too big a bank that one person can have such a big impact. But like I said, in the short run, it will be a negative because, like you said, in 94 and 2018, it's almost since inception that he has been the driving force. And clearly, I've been tracking the stocks for almost since its listing. He has definitely contributed as much as Mr. Aditya Puri.
Okay, well, shifting focus from banking now onto the aviation sector. Jet Airways has cleared the air on deferring its results. The airline has said that its management has informed the audit panel that it needs more time to finalize its accounts. In its statement, Jet also stressed on the fact that it was not the first time in corporate India that an earnings release had been deferred. Jet also clarified on the exit of the chairman of its audit committee, S. Vishwanathan. The airline said that he hadn't quit the committee, rather his term had come to an end. Well, staying with aviation then, the national carrier Air India has issued a staff notice over the matter of pending salary for the month of July. The airline has told its staff that the delay in payment of salaries was due to circumstances which are beyond the control of Air India management. The letter also said that all efforts were being made to make the payment by next week itself. Meanwhile, an aviation ministry official has told CNBC TV18 that negotiations were underway on 2,000 crores for a short-term cash requirement of Air India. The aviation ministry expects to get the finance ministry's approval for that proposal soon enough. All right, time for a break now, but up next we're going to be talking about Glenmark's numbers. Posted what was a weak set of numbers but in line. And we'll also get you a preview of Tata Steel's Q1 numbers.